Here's the current stock market update for GameStop Corporation, stock ticker GME. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons so that other traders will be able to find this information more easily on the platform. So I hate to be the bearer of bad news here. I don't enjoy giving bad news about this stock, but as we can see here, the share price itself is moving lower at the moment, and we are about to come into some very critical price zones that could sort of make or break this stock going forward, at least as far as the near-term trend is concerned. So in this video, we will be outlining some of these specific price levels and explaining why they're important so that we can try to develop some profitable trading strategies for this stock going forward. So as things currently stand, the price level that I have been pointing to in several videos now has been this roughly $23 per share level. It might not seem as though it's very important, but I have explained in prior videos there are several reasons why this area of resistance was critical. And there's a lot of similarity here between this $23 price zone and this prior $29.79 price zone that I pointed to previously. And this, of course, was the early sort of precursor for this movement lower. Ultimately, this trend wave to the downside culminated in price lows that came in $18.73. So as things currently stand, we're not trading at quite that level yet. We're looking at share prices of $20.81. But this is very significant because we did break below this $23 level. We were not able to convincingly break above here. As I said previously, there was a bit of a spike high here above that $23 zone. We did see an ultimate price high come in at $23.09, but in my view, it just really looked like a false breakout because it was very small in size and there was no closing hourly period above that price level. So, and needless to say, there was also no daily or weekly close above that price level either. So, that is sort of what I was pointing to in prior videos. I did suggest that this support zone was then likely to be broken to the downside. And as we can see here, this is exactly what has occurred. So at the moment, as I said, we're trading right around $20.80. This is very important because, now we're within striking distance of that magical $20 level that so many people have been watching. Roaring Kitty did sort of place a lot of focus on that price level specifically. So I do think that any break below there is going to be very critical for this stock because I think that some people will start to throw in the towel at that point. I understand some people don't believe that. Some people think that, GameStop will just be held forever, hold on for dear life and all that, diamond hands and all that. But I do think that people are starting to get tired of this stock. And this is mostly why I have opened the channel section to a members only trading strategy section, because we do focus on some lesser known names that don't quite get as much attention or are not as popular as GameStop. But they have tremendous potential for outperformance here. And as we're watching the share price move lower in GME, we've seen stocks in the trading room move higher by more than 75% in just a few weeks. So, the contrast here is very stark. There are plenty of stocks out there in the market that can be traded. And it's just unfortunate to see so many people focused on this stock, refusing to give up on their positions, and just watching share prices just continue to decline. So as things currently stand, the next major level of support here, I shouldn't even really call it major because I'm not completely convinced that this 2039 level will actually hold. The reason that I say that is because there's just all we have here is a level of historical support. We do not have any other technical indicator appearing in this region to strengthen that level in particular. All we have is the fact that it tested this level previously, and we saw a little bit of a bounce there previously. But that bounce was less than $3. It was roughly $2.50-60. So the bounce there was not significant, and we're already starting to see downside pressure here start to unfold. So I don't expect that this 2039 level to be a major level of support. It would be the next in line is a better way. a better way of phrasing it. So if we do see a break below this 2039 level, I then think that this $20 handle is going to be lost. I don't think that share prices will be able to maintain themselves at that point. So we can sort of look at the indicator reading here and look at some additional reasons why I find that to be the case. All of these trend lines here were drawn out in the prior video. I've not changed any of that except to add this arrow here to show that the emerging upward trend momentum that we had been seeing ever since the stock posted these lows at $18.73, that trend has now been invalidated. It's no longer governing share prices. It's no longer influencing share prices in the positive direction. So that is not good news. The only thing that I really can point to at this point would be the fact that the share price itself is now trading in heavily oversold territory. We're trading below the 20 mark. So that would be deeply oversold territory. Anything over anything under 30. Wow, let me speak properly here. Anything under the 30 mark would be considered oversold. Anything under 20 would be considered heavily oversold, and then anything under 10 would be considered extremely oversold. So what we're currently looking at here is a heavily oversold condition, and that on its own would suggest that share prices should bounce here, or would need to bounce in order to move back toward their longer term moving averages. In addition to that, we can also show the fact that the share price itself has now deviated quite substantially from the exponential moving average cluster. So this is a 1 hour price chart. So this yellow line here would be the 20-hour exponential moving average. And as we can see here, there is a very significant distance between the actual share price and this 20-hour exponential moving average. So it's not really normal to see that. Generally, when you see share prices deviate substantially from those moving averages, you start to see a little bit of a bounce here. We can see that occurred previously when share prices reached this 1873 level. There was a major movement to the downside. The moving averages were not able to keep up, and then share prices did bounce higher. So there are a couple of things that you could point to here on this chart, which would suggest that an upward price movement would be necessary at this point. But that's mostly due to the fact that the movements to the downside have been so extreme. We're really seeing share prices crash at this point, and if we do see this $20 handle level break, I'm very skeptical about how many diamond hands there are going to be left in the market at that point. I do think that people are going to start to throw in the towel on this stock relatively soon. So here's the current market analysis for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.